Hey guys, welcome back to the Capital Mindset Show. Today we're going to be revisiting Walgreens Boots Alliance. And you might be saying, revisiting, where's the original video? Well, it's in the description below. If you actually check out the content library, if you're on Windows, you just press Control F and type in the ticker. If you're on Mac, press Command F and then type in the ticker and it should take you right there. All right, so we'll actually talk about the price point. This is a stock that I used to hold in the portfolio. For those of you who are longtime followers, you guys know I sold this one in the 50s, bought actually in the high 30s, and so I'm no longer a position holder, but that doesn't mean I can't be impartial to this and kind of figure out whether or not it's a good investment. I can kind of tell you that I don't really have plans to add this to the portfolio because I have other focuses at the moment. So I will be making updates to those older videos because in those older videos, I did discuss the position back in the day. Now, some adjustments to those statements. I want to actually highlight the sale of AmerisourceBergen by Walgreens, and actually I'll highlight that right here. So they actually reduced their sale or their position to about 25.2% from 28.1%. You can see that highlighted above me. Now, this is coming after the arrangement that they had with AmerisourceBergen to sell one of their business lines to the company. It actually boosted their stake. They were actually able to pay down some debt. Currently, the company has about $11 billion in debt. The company at the present moment in time, will actually show you the price here, is about trading at $44.01 as of recording this video. You can see that the PE ratio is at about 6.07 right behind me, with a market cap of about $38 billion and a dividend yield about 4.34%. So this is a very popular company among the dividend payers. Fun fact about Walgreens, back in the olden days, and actually we did talk about this in one of the older videos, they used to sell milkshakes. So a lot of people don't know that. All right, but that's not really pertaining to the business. One thing I'll actually highlight is the company actually focuses, you can think about the pharmacy section is all the way in the back of the store, because the company focuses on getting more and more customers into the store so they can upsell them on their convenience products and on the pharmacy products. More recently, Walgreens has been actually working together with other companies such as Village MD in order to actually get facilities, such as medical facilities, in their different locations so that they can provide other services and, again, bring forward that traffic. One of the things that they actually benefited from was from the vaccinations, and a lot of people were coming to the Walgreens locations for those vaccinations while they were there, again, driving up that store traffic, driving up that consumer engagement, and then you could actually increase sales. Well, some of the risks I'll actually highlight towards the end of the video will be kind of talked about. I want to highlight one thing that is a negative. They actually just reached a settlement agreement with the state of Florida. Why is this a negative? Well, it's because it does open them up to other arrangements with other states. They might come after them for the opioid pandemic or opioid epidemic. And one thing I'll actually kind of harp on here is the payments. They have to pay about $60-something million upfront in order to actually pay for the lawyer fees, and they have to pay about $34 million per year to the tune of about $600-ish million for the next 18 years. So that's about $34 million per year. So not too good there. That's kind of settled more recently, and that's actually making a drag for analysts. Analysts are not really liking the stock too much. We see average buy prices or price targets from about $44 from Bank of America to CFRA having it at about $50-something per share. And Morningstar, I think, has it at $48 per share. So with all that being said, I also want to talk about the moat. The moat isn't very existent with Walgreens. There's strong competition from the likes of Walmart, Target, CVS. I think CVS and Target have a partnership. Walmart, though, is kind of isolated on its own, doing its own thing. You also, of course, have Amazon. You have a variety of other companies that could also step into the fray and start competing in a meaningful way. But it goes to show you that this is a very competitive market. At the end of the day, the consumer wants convenience and price above all else. So the company, I think, might be trading for this. I took a quick glance as to who's kind of talking about it on YouTube still. I did see that we saw there's the channel Everything Money, I think, is still investing deeply. Again, I'm no longer invested in this company, but it was a good run while it lasted. I did enjoy being owner while I was. I collected some nice dividends, made some nice gains. And the company, I think, is a quality business. It's not a bad business by any stretch of the imagination. So now I'm going to take us over to the model, and we're actually going to pay attention to what we can kind of extrapolate from this. And I'll kind of adjust us here so we can also see better on mobile devices. So I already kind of plugged in some assumptions on growth rates. I have a discount rate of about 15%. The discount rates are actually coming down a little bit because the market is actually, in my opinion, getting a little bit better. We do have a buyback percentage of about 2% assumption. They have been doing really aggressive buybacks. I'll show that here in the visualization. Down here you can see since about 2017, they've been actually buying back shares aggressively. Revenue is actually expected to come down a little bit. They did have a little bit of strong revenue growth boon from the pandemic, again, probably vaccinations, to tune about 8%. Now they're expected to actually come down a little bit on their estimates. They have a strong buy rating by analysts. Again, I kind of went over some price targets with you guys by analysts. And we look at ROIC, return on equity, return on assets, not too exciting there, but not abnormal for this business. We do want to also state that the Altman Z-score and the model's own metric is not actually picking up risk of bankruptcy, but also not so certain on that front either. So it's the data is inconclusive on that front. And also I want to actually talk about the business's ratios here. We'll actually go over here, and the solvency ratios look like they're getting worse, not better, which is unfortunate. They did actually improve slightly, supposedly on their long-term debt profile when they sold that business to AmerisourceBergen, and they are actually capitalizing on that and selling more shares of AmerisourceBergen. However, that actually might, well, we'll see how that kind of pans out over time. They are also trying to sell Boots. So Boots is actually the business that they actually acquired way back in the day. And, well, not too long ago. I think it's been about almost less than 10 years, I think. And they're trying to sell it. The bidder came with an offer. Walgreens to say, we want more. Now the bidder's kind of stepping back and saying, I'm probably not going to pay that much. And so that's a little bit of a concern. Banks are also a little bit hesitant to lend to that bidder for the purchase of Boots, and they're probably looking at the risks regarding the consumer. We'll talk about that more in the risks. So let's go back to the summary report and kind of conclude here a little bit about it, or I'll explain my growth rate. So I do think that they can grow at 4%. I think that's feasible, and if you believe that, the company could be a compelling buy here. If they grow at 0%, we were just actually there because it actually just teetered on the edge of $40 a share more recently. You can see right about there on May 19th, it actually hit $40.61. Well, that's the closing price, but it was around $40 a share around that time. And I actually got requests for me to do an update around that day because it got all the way down. And I think it's because people knew that I used to have a position in this company. Okay, so, but that being said, I think that it's conservatively priced, and if you want, you can see, if you go back to the older videos, I'm pretty sure I talk about how when I was buying it, it was priced for basically negative growth. The risks, now I'm kind of going to segue us into that, and I think the risks are abundant. For example, we have Amazon. Amazon, I think, is a big risk. Remember, convenience and price. We do see that AmerisourceBergen, Cardinal Health, and McKesson all had their master settlement agreements, but we have to wait to see if Walgreens will have a master settlement agreement with many states across the country to kind of finalize that. Now, with regarding the Amazon risk, that's actually one of the reasons why I liked Cardinal Health at the price I got it at, was because a lot of people were citing it as the risk was, oh, Amazon's going to come in and destroy them, the triopoly of those three companies. I think that risk more lies with Walgreens. Funnily enough, Cardinal Health does actually work with CVS very strongly or closely. And one more thing I actually want to highlight with this is CVS actually made an acquisition on an insurance company. I don't want Walgreens to do that. I think they'd be best served to partner with an insurance company and not have all those additional risks. I think that they should just focus on the main business. I'd love to hear your thoughts down below. Do you think they should acquire an insurance business? A lot of people like the words. I think that people think it's really sexy. They say vertical integration. I remember my economics class, and that's amazing. Vertical integration, that's what monopolies do. They should do that. Not always. You want to actually make sure that you're good at what you do and not kind of over diversifying for the sake of diversification and what we call empire building within the business world. So I'd say on everything, the main risks are still there and maybe more prevalent than ever. We have Amazon, we have Walmart, we have a bunch of other competitors kind of encroaching on all sides. We have the consumer. So this is the other part. For the short to medium term, I'd be a little bit more concerned with the consumer. We are seeing oil kind of rising or rallying today even more. Again, this squeezes the consumer spending power, and that affects discretionary spending quite a bit. It could actually lead the United States into a deeper recession than what previously anticipated. If that were to occur, that discretionary spending comes down, or at least at the very least, consumers are going to be more spend conscious, and that's going to hamper down on margins for something like Walgreens. And again, it might be an opportunity for competitors such as Amazon that have loss-leading businesses to kind of come in and say, well, we'll do convenience and cost, and same with Walmart. Walmart has a scale. Walgreens does have scale, and so does CVS. I don't want to actually take away from that. They do have the scale to compete. It's just going to be a cutthroat business, and that might actually lead to lower prices. It could happen. So on everything kind of together, I think that overall, I can see the case why someone might say at today's prices, Walgreens is a buy, or at the very least a hold and reinvesting those dividends. But on that note, I'd love to hear your thoughts down below. What do you guys think? If you guys found value in this video, go ahead and feel free to leave a like. Subscribe if you haven't. This video will be added to the content library. And again, go check out the other videos if you're so inclined to see if there is a stock that I have covered in the past and you're curious on my thoughts. On that note, guys, thank you guys so much for watching. I'll see you on the next one. Bye.